What's going on, everyone? This is going to be a very insightful video packed with valuable lessons that I probably should add to the course, but I'm going to post it here as it's something that a lot of traders I feel can relate to. We're going to talk about how to make more profits in trading by not really caring about our profits. It's going to make sense as we go through it, but all I could ask is if you could just drop a thumbs up on this video. Let's try to get it to 568 likes. And also, before we begin, if you want a very good trading resource, I'm going to link my Instagram in the description below. I post daily trading recaps along with very good trading tips and tricks. It's a very good resource and you're missing out if you aren't following it. Without further ado, let's get right into this good video. So in order to profit more or to get more profitability in our trading, you have to detach from the money. You have to remove your need to make money in this game. This is a process. It's a journey. This is not a get-rich-quick scheme. Everybody sees it all over the internet. You can make $1 million trading. It can happen. It can happen also very fast if you get lucky. However, it's a journey. It takes time, and you have to enjoy the process. You also have to trade based off of that process. You can't trade based off of the profits. We're all obviously in this game to make money. However, if you put your focus to the profits over the process, it's actually counterintuitive and you're setting yourself, 3 steps back. I stress this with members in my community. I tell this in my course. You have to focus on trading well and you have to focus on the process over the profits. You only have to trade when your edge is present. You only trade when you have a plan. If you cannot have a predetermined plan with an entry, with an exit point, with a take profit point, and when your edge is present, your edge being something that gives you a hurdle or an advantage over the competition, that's the only time that I personally will trade, and it's something I recommend. Your edge is selective to yourself. It's something that somebody else does not know. It's something that's going to give you that advantage over the competition. So why trade when it's not present? In my opinion, that is just gambling. So when you follow your edge and your plan, you're going to make money in the long run. I know what makes me money, and every time I deviate away from that, I lose. So my edge is taking the market long with confirmation inside of a demand imbalance. The idea here is to either play long the equity or play calls if you trade options. Zoom, for example, sold off right into this demand zone. We had a beautiful double bottom inside of demand. It's a valid entry to get long, and you could have got a quick 6-7 point rally on this trade very fast because this is my edge and this is what makes me money. Before I enter any single trade, I'm not thinking about how much money I can make off of this. I'm not even thinking anything on the monetary side to the trade. My thought process prior to entering is, where am I going to exit if I'm wrong? Where is my proper entry confirmation signal? And where am I going to look to take profits if I am right on this trade? The money will come directly after that. It's not something I think of prior. Too many traders think that the market's selling off. Let me take it long. I can make 10 grand on this trade. I can make 50 grand on this trade, just like that. It's possible. However, if you put the money first, it's not going to happen, and it's very counterintuitive to your trading. The profits are a byproduct to following your strategy. What I mean by this is, if you follow your edge, you follow your strategy, the profits are going to be guaranteed, to come. It's a byproduct. It's a result of something else. When you don't care about the money, I'm telling you for a fact, this completely changed my trading. When I first started, I was so intrigued with the money aspect. However, when I put that to the side and focused on improving every day, taking good trades, and I detached from the money, my trading became 10 times easier because I wasn't so profit oriented. When you become profit oriented, your emotions become, tied in. The Flash Cash Trader of 2010, Nav, he says if you don't care about the money, you have to look at it as a computer game. You're playing, you're trading to win, but it's a bonus if you get paid. So if we follow our plan, look at it as if we profit as a bonus, and we're getting extra money for doing something correct. You have to look at it as it's fun to you. You can't do it solely for the money. So that brings me on to my last point, which is you don't look at what's going to happen in the future and you don't reflect on the past. The greatest time in the market is right now. If you're too concerned about the future, how much money you can make. And if you reflect on the past, maybe how much money you lost or where a better entry could have been, you're setting yourself back. And you have to realize that the greatest point to enter, or the greatest point to think of something, is in the present moment. It's right now, what the market's telling you at that given point. So losses should not affect you at all. You cannot take them personally. If you take losses personally, you get butthurt, you get very upset, you get angry, you get frustrated, then trading is not for you. You cannot take losses because they are inevitable. Everybody takes them. The people that don't take them personally are the ones that are going to succeed. These are the people that don't reflect on the past losing trades. If I took a losing trade yesterday, I brush it off and I focus on the next trade that I'm going to take. If you focus on the past trades, it's going to affect your future trades because you're worrying about the next trade, and that's going to affect your trading results at some point in the future. So losses are completely inevitable. You cannot avoid them. If you take a loss following your plan, brush it off. The trade just did not work out. The market was not in agreeance with your entry. It happens. You're not going to win 100% of the trades. You're going to have losses. The key is making them controllable, that not one single loss is going to put you out of the game. There's tons of trades I take where they don't work out. My risk is tight and I'm comfortable taking a loss. I don't get upset taking it if I do follow my plan. Now, if I deviate away from my plan and I take a loss not following it, frustration and anger are going to build up, and it's going to affect your future trades. That's why it's key to follow your edge. For example, if we pull up this Tesla chart, let's just act like we don't have supply up here, correct? Traditional technical analysis, if we go to a 30-minute chart, we had a wedge, whatever you want to call this, where we made a higher low over here, consistent higher lows, and we also were consistently making lower highs. So we were getting tighter and tighter. Tesla reported earnings after the close today. By the time you're watching this video, earnings got released. Now on a 1-minute chart, the deal of traditional technical analysis is to long the market once we come above a bear wedge or any type of wedge or any type of flag, right? So now let's just say we're long right here. I'm deviating away from my plan. I'm taking the market long when we're not inside of a demand zone. So now I'm trapped in long up here, right? The market starts selling off. I'm completely baffled. I'm taking a big loss. I'm not following my edge. I'm not respecting my risk. And I take a completely big loss. It completely destroys my account. However, if we add out my supply and demand imbalances, these are levels that I manually draw. This is not an indicator. They're based off of price imbalances. I would have never taken this trade long. In fact, I would have taken it short. Because we are at supply, you want to take the market short. You want to play puts on the options. And this would have been a very high quality trade. So there's two ways to look at it. If you follow your plan, I'll pull this up over here. If you follow your plan and you take a loss, look at it as a win because you were disciplined enough to actually stick to your guts and trade your strategy and stick to your plan. Brush it off. Didn't work. The market just was not agreeing with you at that time. However, if you take a loss and you don't follow your plan, you're not going to have any consistent success in the long run, and frustration and anger will build up and it's going to affect your future trades. So I do have experience with prop firms. I have family who works on Wall Street, and when I was shadowing them at one point, a trader sitting next to me, I had no idea at the time, it only happened after, he told me that he took an $800,000 loss. Now, $800,000 is a lot of money, but for some people, $800,000 is not a lot when they're consistently making, millions of dollars per trade. So I didn't know. I was sitting next to the guy when he lost the money. I didn't even know at the time until after the market closed. We went downstairs and he bought us all beers. He didn't care about the loss. You would have never known he was sweating about a trade. You would have never known he took a big hit because he brushed it off. He did not let it affect his mental game. It didn't even let him affect his physical game. I would have never known if he didn't tell us the story. And the fact was that he was happy. He was buying us all beers. He was cracking jokes. He knew that tomorrow he can make that money back. The next day he can make that money back. It's always going to be there, he told me, the market. It's not like something that is gone completely. You could easily make that money back sometime in the future. So why worry about it? You just have to keep them, the losses controllable. You can't make a big one completely wipe you out. Now, this is something a lot of traders probably relate, and it's a simple fix in your trading, and it really goes a long way. So detach from the money. Stop watching your profit and loss flicker up and down. When you're in a trade, you might have something that doesn't work out right away. You might be in your red immediately. And what that does is psychologically, it'll mess you up and it'll make you make a decision based off of your emotions and not based off of the chart. The idea here is to trade off of the chart, not on what you are feeling. Also, profit and losses flicker red and green, as subconsciously, green means you're making money, red means you're losing money, and that's going to also affect you. So do not watch your profit and loss. Trade the chart, trade the setup. This brings me back into my first point. I'm not even thinking about the money when I'm in the trade. I know as soon as I hit that close and that sell button on the market, I can then look at my profit and loss, and you'd be surprised. You might even make more money than you actually anticipated prior to even looking at the profit and loss. So follow the plan. If it works out, you will make money. Believe me. If you're attached to your profit and loss, you're going to make decisions based off of your emotions, and it's going to base it off the perception of the money. Just like I said, green or red. I stress this a lot to members. Profits are the score. They are not the game. They come to those who play the game. It's inevitable. Profits will come. It's the score if you play the game. It's like playing a basketball game. Have you ever seen a team score 0 points? No. If you're playing the game, you're doing it right, you're doing the right things, you're focusing on the mental and physical side to the game, the profits are the score, and they're guaranteed to come. For example, let's say I was in this Tesla trade short, right? Hypothetically speaking, let's just say I top tick this. I get in puts on Tesla at, let's just call it $10 on the contracts. I bought 10 contracts, it cost me 10 grand. All of a sudden, the market starts selling off. We're down about 7 points from the high. My contracts at $10 are now $18, and I'm up 8 grand on a $10,000 investment, right? I'm up 80%. I look at my profit loss constantly throughout the trade. So at this point, I know I'm up 8 grand. I'm like, wow, 8,000. Some people don't even make that in a month. Maybe let me sell it here, right? So let's just say I sell it. The market briefly reverses, and then boom, it starts selling off. And that $8,000 winner that I sold right here could have turned into a $30,000 winner if I held for another 10 minutes. So it's all about the perception of money. Another perfect example. Let's say I was short. I see I'm up 8 grand right here. Next 2 candles, we start rallying. At one point, we're about $2 away from my entry. And an $8,000 win now is only a $1,000 win up here. And I start panicking. I'm like, wow, I just lost 7 grand. I'm only making 1,000 now when I had 8,000. Let me sell it. I don't want to make this trade go red. And what do? They sell it up here. If they were patient, they followed the chart and not their profit, boom, they would have had a really big win. So it's all about perception. It's all about trading the chart, detaching from the money. Stop watching your profit and loss. Do not take losses personally, and focus on playing the game. Focus on the process. Enjoy it. It's a journey. And when you win and you follow your plan, there's really no better feeling, especially when you look at your profit after the fact. So I hope this video helped. I'm going to end it here. I hope you got some insight off of this. If you want to learn more, check out the course and chat room that I offer in the description below. There's some very serious value in there. I'm having amazing feedback from members. Also, be sure to follow me on my Instagram. If you have any questions, DM me. Peace out.